Following the triumph of Bitcoin, a slew of new virtual currencies flooded the market. There are not hundreds, but thousands of them. How can we know if the coin we've chosen is indeed worth anything? Stay tuned to find out. Hello future billionaires, welcome back to our channel. The channel where you get stock inspiration, motivation, and knowledge to become the next future billionaire. Today, we will be revealing how to tell if an altcoin is a shitcoin. Before we get started, a humble reminder: subscribe to our channel if you haven't already, and remember to turn on post notifications as well to never miss a video from us. Without further ado, let's get right into the video. We must begin from the very beginning. Who hasn't felt lost before? Let's say you've heard of Bitcoin, but you recently discovered that it's not the only cryptocurrency. Altcoins are all the coins that came after it. If you've ever combined two cryptocurrencies merely to see how much one of them costs, don't do it again. The price alone is not a measure of worth in the world of crypto assets. At this point, all you have to do is glance at the coin market cap rating. How are things going for you? You've probably seen that some of the less expensive cryptocurrencies outperform the more expensive ones. It's all because they're ranked by market capitalization. But what is that? Simply put, it's the market's total number of shares multiplied by the current price. Cryptocurrencies with a low market capitalization see more frequent and severe price swings. They can spike by hundreds of percent in a day and then plummet in an instant. This sort of coin carries a high level of investment risk. If you trust in the project's potential and find its concept appealing, purchasing a coin belonging to it becomes logical. When you belong to the group of people who simply look at the potential profit, not the technology or plans of a specific startup, everything changes. Without correct understanding, you might fall into a lot of traps. It all depends on the project's assumptions, the leadership team, and the need. If it's beneficial and adds value to the market, it is more likely that other investors will be interested in it. To entice customers to buy it, the cryptocurrency must fulfill a certain function in its ecosystem. Ether, ETH for example, is a cryptocurrency that runs on the Ethereum platform. It's not only a speculative coin, but also a clearing unit. It's often referred to as fuel by cryptocurrency enthusiasts for apps created on the Ethereum network. Some newcomers to the cryptocurrency industry believe that any crypto can become a second Bitcoin if you buy it cheaply and wait for it to rise. Nothing could be further from the truth. The truth is that some initiatives will never take off because they don't offer anything of value to their users. Few people will buy a cryptocurrency that looks like Bitcoin without any enhancements, and those who do will be ignorant. Crypto projects can be classified as good or bad, with scams and pyramids lurking on the outskirts, which have little to do with the virtual asset market. A successful project is one that recognizes and addresses its assumptions. The weaker one has some delays and is not without flaws, but it works to satisfy the expectations of its investors and the goals it set for itself. Financial pyramids and scam ventures, on the other hand, are profit-oriented in advance. They don't add any value, rely on pre-made templates, and rely on marketing as their main source of revenue. So, which cryptocurrencies qualify as shitcoins? A cryptocurrency with little to no value or a digital currency with no immediate, visible use is referred to as a shitcoin. The term is sometimes used as a derogatory term to characterize altcoins or cryptocurrencies that emerged after Bitcoin became prominent. Because it was not established in good faith or its price was founded on speculation, shitcoins often lose value owing to waning investor interest. As a result, these currencies are regarded as poor investments. In other words, the ones that were made for no particular reason. It is common for investors to refer to them as coins on which they have failed to earn money. This is plainly absurd, given some of them can play a major function in the project and do not necessarily experience significant price changes. As a result, prior to making any investment, it's a good idea to perform some research. Keep track of how the price of a certain cryptocurrency has changed over the last several days, months, and years. Learn more about the project's origins. Who's behind it? Do they have the right experience? Have the objectives been met? Last but not least, what are the possibilities of success? Will there be a price for the cryptocurrency as well? Does it have any significance in the ecosystem? So, How do shitcoins work? Since the introduction of Bitcoin in 2009, there has been significant growth in interest in cryptocurrencies. Their popularity has attracted companies hoping to use blockchain technology to build their own altcoins, which are digital assets that are based on the Bitcoin design. Developers usually indicate how many tokens will be made accessible in the end. Bitcoin supply is limited to 21 million coins, while Ether supply is limited to 18 million per year. Setting a supply limit generates scarcity, since investors know that after a certain point, no more tokens will be generated. More tokens would theoretically dilute the value of their holdings, much like a new stock issuance would. Because an altcoin supply is fixed, its value should be determined by demand. However, because most cryptocurrencies have limited practical applications, buying and selling real-world goods and services using cryptocurrencies is still uncommon. Their valuations are purely speculative. As a result, a shitcoin is something that people claim to be valuable just because it exists. Shitcoins are easy to spot since they have a consistent pattern. Although a coin may generate some curiosity when it first releases, its price remains quite stable. However, when more investors get on board, the price rises enormously in a short period of time. Following that, investors dump their coins in order to profit from short-term gains, causing the price to plummet. While interest in cryptocurrencies continues high, it's unlikely that the development and marketing of altcoins that may one day be labeled shitcoins will slow significantly. Some governments, such as those in South Korea and China, have taken a particular interest in putting an end to cryptocurrency mining activities, while others, like Japan, have supported the use of cryptocurrencies in the larger market. There's plenty of space for abuse in the cryptocurrency market, where investors may struggle to draw historical comparisons, and the underlying technology used to govern blockchains may not be properly understood by a substantial number of investors. It's tough to tell whether cryptocurrency is viable or was designed to defraud investors. Different from estimating the price of securities or traditional currencies, establishing why an altcoin is valued at a given price necessitates a different technique. Because altcoins are not backed by governments, investors can't use GDP growth, debt levels, or inflation to evaluate if a cryptocurrency is cheap or overvalued. The fact that most information regarding altcoins is published on the internet, where it can be difficult to determine whether the material is accurate or just fabricated to generate hype, adds to the confusion over whether an altcoin is genuinely valuable. Some cryptocurrencies, such as Dogecoin, may simply be marketing initiatives that don't offer any new technology, use, or business model. Dogecoin is sometimes referred to as a shitcoin because it's a cryptocurrency whose efforts aren't entirely serious. There are also cryptocurrencies whose efforts are serious but not very good or well performed. Others can be turned into shitcoins by pump and dump buying patterns, which are triggered by a group of people getting together to buy a cryptocurrency, forcing others to pile in. Once the price is inflated, they sell their investment, leading the price to plummet. This can tarnish a cryptocurrency's reputation, partially because already weak coins are chosen as a victim. Surely, many who live more fully in this world maintain a romanticism of the Wild West and believe that such reckless behavior is typical of the same. In essence, calling anything a shitcoin means they don't think it's a cryptocurrency worth investing in, though they might be from any point on the cryptocurrency ideology and/or analysis spectrum. There are entire conversation threads dedicated to debating the definition of shitcoins. Lastly, do your research and due diligence on the crypto asset you're investing in. It might seem like a no-brainer. However, you may be amazed by the number of people who invest in cryptocurrency with very little knowledge of what it is. When researching crypto assets to invest in, make sure you know what type of token it is, how it's performed in the past, how much demand there is for the coin, and how long it is predicted to last. You should read the project's white paper and research the founding team to verify their authenticity. A coin with little activity and little liquidity is likely to be worthless and soon deteriorate in value. And with that, it's time to end the video. We hope this session was informative. Do let us know in the comments section below. Subscribe for more content just like this one and share it with your friends. Also, don't forget to smash that like button and also press the bell icon to get notified about our new videos. Until then, fellas.